Hey everybody, thanks for tuning back into Crypto Mainly. My name's Lee. 305 subscribers, guys. It's creeping up each day that I look at that. It's really nice. Thank you very much. It's a brand new channel, as you know. I'm just branching out on my own. So please, if you're new to the channel, don't be put off by the number of subscribers. I've been working behind the scenes with one of the most recognised crypto influencers in the space for the last 2.5 years, and just branching out by myself now. Please don't be put off the number of subscribers. The channel is very new. Couple of options for you guys. If you look, there's a link in the description below if you'd like to come join our free Telegram group. Alternatively, if you click on OpenSea here, you can actually purchase one of the NFTs. Got two versions of the NFT at the moment. This one here entitles you to 6 months free access to the VIP channel. Alternatively, you can purchase one of these, which is a monthly subscription, which is around about $100. You can either purchase an NFT for the monthly subscription, or you can pay directly with cryptocurrency. So if you'd like to find out more about that, come and join a public Telegram group. The link is in the description below. It's free of charge. Really nice bunch of people there. There's no bots, scammers, and all that type of thing. That gets eliminated very quickly. I've got a very sort of low tolerance for that type of thing. So it's a very nice collection of intelligent people that are there to help each other out. And it's becoming a really nice community. So do consider coming along and joining us. And I look forward to seeing you there. If you do consider purchasing one of the NFTs on OpenSea, please do verify my account, guys. You can see there I'm the owner of cryptomainly.eth from the Ethereum naming service. So my wallet address is cryptomainly.eth. No dots, numbers, letters, or anything like that before or after. So let's jump into the content. The last couple of days, guys, have been sort of putting out some warnings and been sort of very sort of not so much doom and gloom, but I think it's as important that you're all aware of what I see happening on a negative point of view, on a bearish ideas, as well as it is on bullish ones. I mean, for me, it's as important if you're trading in the right direction when things are bullish. It's as important to be protecting yourselves at the right time when things are changing bearish, and then of course you can start to look for shorting opportunities and to make profit on the way back down as well. So I know people are not so keen on the bearish videos, so please forgive me. But I do just want to point out and continue with that topic in today's video. So at the moment, guys, we are sort of still making, this is starting to look like a rising wedge pattern here, which you can see lots of people on social media are starting to talk about this as being a rising wedge, which of course would be a bearish pattern, 68% chance that actually breaks to the downside rather than the upside. But I mean, Bitcoin's shown a lot of strength, and I'm not quite so sure that we're actually done with this upward move quite yet. I think we are actually going to be at least having an attempt at the lower part of the CME gap before we do start to roll over. But we've only got, it's the 16th of August now, guys. We've only got a couple of weeks for us to get up into the region of that CME gap before rolling over. Because as you know, I'm thinking that I'll be exiting my positions towards the end of the month. First week in September onwards is usually not a good time for cryptocurrency, and I'm just going to elaborate on that in today's video. This is a parabolic curve that we've been looking at. The purple line is a parabolic curve, and the blue line is the support of the candle body lows here. So the candle body lows here. As you can see, guys, we did get a bit of a breakdown from that area there, and we are looking like we're trying to break down again now. So if I just make the parabolic curve line a little bit lighter so that we can see this support line here. So you've got the candle body lows here. You can see that this is a ray projection, and I've gone by the candle body low here, and it's lined up perfectly with the candle body low here, this green body of the candle there, and we started to break down here, and we pumped back up, and now we're starting to break down again now. I'm not a big fan of moving trend lines, guys, but there is an argument that perhaps if we just extend this ray out and actually use the lower candle body here of this green candle here, then you can see we are sort of teetering on the balance of perhaps still being okay, although things are looking like they are trying to break down at the moment. So this is a bit of a counter argument to my theory that we're going to continue up and have a stab at the CME gap. I'm sort of the opinion. I mean, if you look at this, we're still creating. We've got lows, highs, higher low, higher high, high lows, higher highs. This is still an uptrend officially, and that's until we break that. Obviously, what the thing to watch for is if we start to print a candle below these lows here. So if this comes down and we print a low here, that would be potentially the first lower low. And then obviously, we've got to be really careful. Then we could be looking at a breakdown of price. But I mean, I'm keeping a very close eye on this. It is making me a little bit nervous because of the time of year. We're getting towards that sort of September period of doom and gloom, and things are starting to look like they are trying to break down a little bit here. Bitcoin is having a real job of trying to reach the higher prices and the breakout. The sort of the key level to watch for the range high there. So the candle body high, I should say. Uh, there, let's just make that in red so we can see that. Okay, let's try a different color. Let's try yellow. So 24,463 is the candle body high from this central point here. Um, you can see we've got 1, 2, 3, and trying to form now like a fourth sort of bearish candle here. But you can see that the bulls are still battling, and we are still keeping the price up together there. But yeah, the level for us to break above 24,463 is the candle body highs of this range. If we can get a daily close above there, then we are likely to get that continuation higher to the upside. On the flip side of that, this lower dotted line here, 23,850 is the range highs from the central point of the range here. So 23, if you see, closes below 23,850, then there's a much more higher probability that prices are going to come down further. So we are in sort of no man's land at the moment. There's this sort of conflicting things on each of the charts I'm looking at. Some suggest up and some suggesting down. We've just got to be really careful and cautious. And I'm more, quite aware of the fact that we are approaching this September doom and gloom phase. Now, just to elaborate on the September, I've just done an exercise here where I've done some back testing, just to demonstrate to you really what I'm saying about the threat that September poses. So if we look back here through the entire history of Bitcoin here, you can see that just firstly, I just point out there are a couple of outliers. So you know in that the sort of the correction in 2015 actually happened in July, and also in 2016 the corrective move was in June. But aside from that, if you look at every September for every year, as I've highlighted on this, going all the way back to the beginning of time. So September 2011 is 72% correction. The 2012 one was sort of mid-August, so a little bit early, but a 50% correction there. 2013, a 26% correction. 2014 again, started sort of mid-August, was a 68% correction. Then you've got the two outliers, which were we just ignore those for now. So 15 and 16, you did get corrective moves then, but they actually happened earlier in the year, as I say. So the 2015 one happened in July, and the 2016 one was in June. So we'll just ignore those two for a minute, so see that they're a little bit of an outlier. But you can see even in the huge run up. So the 2017 run up to the 20,000 previous all-time high, you can still see that even in that run up, the September 2017. So bearing in mind that this is the huge run up all the way from the lows down from the lows down at sort of $170 all the way up to 20,000. So a huge bullish momentum there. But even on that parabolic move to the upside to 20,000, in the center there was still in September, from the 1st of September, a 40% correction from the local high. So since then, since September 2017, we can then say that actually we're talking about now this cycle, if you like. So the run up to 2017 was no exception, a 40% correction in September on the run up. But since then, we've now got 4 years. So we're back to like a 4-year cycle. And we can see, so after the 20,000 peak, we can see that September the 1st, 2018, we're talking about a 56% correction. 2019 was a 40% correction from the first week in September. The 2021 happened actually was again slightly on the smaller side. It was actually a 20% correction, which happened a little bit before September. So you can see there, 16th of August. But obviously so we've got in between sort of the 2019 September 40% correction and the 2020 20% correction, we did have this big black swan event, which we all know. That's March 2020. We all know what happened there. And obviously, that was the COVID crash. So, the market was somewhat skewed, and I think that's why, the figures are somewhat skewed for that particular correction in September of 2020. Much shallower correction over a much shorter time period. As you can see there, guys, I've just written it out for you. 4-year cycle. So 2000. So after I haven't included the 40% correction in the run up to the 2020 to the 20,000 2017 December high. I've just gone from this cycle, so you can see 2018, 2019, 2020, and 2021, and you can see that the average correction for September from actually the first week in September, those are where the measures are taken from, is a 35% move to the downside. Okay, so if we look at the if we put that into perspective here, if we were to get a move from Bitcoin where we actually do attempt to come up to the top of the CME gap there, if that does happen first before we start to move to the downside, then a 35% correction from there, which is obviously the average move. As I say, is an average, so be careful with that, guys. There are going to be variances to that, to the upside and to the downside. But just as an indication's sake, you can see that 35% correction from the top of the CME gap. So the top of the CME gap there is the can't see that figure there actually. There you go. So 28,740 is a figure to watch, guys. That's the top of the CME gap, and when we get up there, that's where I think we're going to get the the corrective move from. But as I say, so sorry, just going back to, if we get to the top of that range, 35% correction actually takes us back down, interestingly, to where we'd have potentially an order block waiting for us just down at the bottom here. So it's quite interesting that we would end up back in this range. It could be that we get a wick down and then the candle bodies are highs. In that case, what that would look like is just grab. So what that would look like if that happens is we would have a series of lows here, and if we do get a wick down and then we get candle body closes above there, we would perhaps be looking at something like this, where again we would be still looking back at a double bottom. People have been looking here at the double bottoms here and things, but on a larger scale, if this did happen and we got the September correction and then the continuation higher after that, we would still be looking back at this as like a double bottom. It would be concerning that if we do break down below that long-standing trend line there. But as I say, we'll have to consider that when we see what actually happens next. So, okay, so supposing that we don't get the move upwards and we do start to roll over here, and the support breaks and we start to move to the downside, what would a 35% correction look like from where we are now? So bear in mind that the measures I've taken are from the highs of that range each time. So I've actually gone from the highs on each measure. So it'd be fair to say that we go from the high, so the high here, and then take a 35% move to the downside from there. So interesting to see, even if we take a 35% correction from where we are now, it just actually takes us down to the sort of in the vicinity of that wick low there, which is quite interesting, I think. Yeah, so quite interesting to see. Again, we're in sort of no man's land here. If what's going to happen? Are we going to continue up to the upside, fill the CME gap first, or are we going to break down and come back down It's quite interesting that the measured moves from the top of the CME gap or from the local high where we are now is all in the vicinity of this lower order block. That's quite interesting. And as I say, it could be that if we do get a wick down here and then the candle bodies close higher, as I said, then we could actually be, we could actually be forming something which we look back on like that, which again would be, as I say, a much larger double bottom. So just having a look at Ethereum. Ethereum is looking a little bit like it's just having a little bit of a rest. Nothing too much to worry about, guys. If we draw the fib from the bottom to the top there, even all the way down here to sort of range highs here, even if we got all the way down there, that would only be the 0.236 level. It wouldn't hurt too much actually even if we got back down to the 38.2, as long as we don't start to close below these lows here. It wouldn't actually be too much, it wouldn't be disastrous if we came all the way back down to the 38.2. Ideally, it'd be nice if we don't close below this green dotted line here. So if I just show you that, so the thicker blue, green dotted line here, which is just above that 0.236 level, if I just scroll across, we'll just show you the significance of that. So if we have a look on a daily time frame, so the summer of 2021, when we had that, the trough, if you like. So we had the run up Bitcoin up to 65k. This is the Ethereum chart, of course, but we had the run up to 65k, and then the summer trough. You can see actually that the candle body close for that summer 2021 is actually where that thick green dotted line is. And as you can see, if we look more recently, we have closed above that key resistance level, which goes back to the summer of last year, and we are holding above it. If we come back down and retest that, that level, which incidentally is at 1,786. So even if we come back down and retest that, I mean, I think it's very positive if we do stay above that and sort of retest that as support. Then things are going to look, particularly nice for continuation. As again, same again, guys. Bear in mind, Bitcoin is king. If Bitcoin rolls over and we do get, this corrective move to the downside, make no mistake, merge or not, Ethereum's price will be affected to the downside if Bitcoin does start to come down. The thing is, the actual Ethereum merge is scheduled for the 15th of September. So 13th to 15th, and that will give, there's going to be a lot of hype, there's going to be a lot of build up, there's going to be some positive action, I think, on price leading into that event, and then a sell off afterwards. So that would suggest again that if we do get, perhaps Ethereum will be, certainly been the market leader for most of this move on Bitcoin. So it's quite possible that Ethereum will make a move to the upside, somewhere between 20 into 2,400 to 2,800 is my opinion, and that would obviously bring the Bitcoin price up closer to that CME gap as well. So that would make sense. The fundamentals of the Ethereum merge could be what's needed to draw the market up and to get the rest of this move, if you like, before we do get the rolling over. But as I say, we've only got sort of 2-3 weeks left. It would make sense that because the actual merge is on the 15th, that the market stays bullish right up into that event, around the 13th to 15th, and then sells off afterwards. There's going to be an airdrop, as most of you will know, Ethereum. Once the fork happens, there's going to be an airdrop of tokens. Once the airdrop happens, people will be selling Ethereum to sort of capitalize on the airdrop things that they've received. So be very careful, guys. Just watch for that. That's going to be a sell the news event. Once the merge has happened on the 15th, there will be a sell off afterwards, probably 20 to 30%, I would say, in Ethereum's price, and then obviously we'll get the run up into the back end of the year. We've got there's obviously I think the CPI data next month is not going to be as healthy as people think, and I do think that will fuel sort of further downside through September. But as you can see, guys, if you look back through history, it doesn't matter. On the larger scale of things, all of these corrections, as significant as they are, is it really relevant? It hasn't really been relevant. If you look at this chart, it's basically up and to the right with Bitcoin. I mean, even if we do get those corrective moves, it'll be great, for you guys if you do listen and you do protect yourselves. And of course I've got it right because I could be completely wrong. This isn't financial advice. I'm not a financial advisor. So please do your own research. But if you do manage to protect yourself from the dip, and then you manage to buy back in, once the corrective move is completed, and things that could be very profitable. And I wish you all the best with that, guys, sincerely. So thanks very much for listening, guys, for liking and subscribing, and I look forward to speaking to you next time. Take care, guys.